What if I told you that keeping your money in the bank might actually be costing you? Banks were once considered the safest place to store wealth. But today, with inflation eating away at your purchasing power, low interest rates barely keeping up, and financial institutions facing increasing instability, your hard-earned cash may be at greater risk than you think. The truth is, holding too much cash in the bank could be one of the biggest financial mistakes you're making. So, what should you do instead? In this video, we'll break down 7 alternative assets that are safer than keeping your cash in the bank. Stick around till the end, because the last one might completely change how you think about money. Disclaimer: please remember that this video is only for educational purpose. We are not promoting any type of investment. If you want to invest, first gain knowledge by viewing the video and then consult a professional financial investor before shelling out your hard-earned money. Asset 1. Government bonds, the safe haven. Let's be real. Keeping all your money in a bank is like putting your lunch in the office fridge and hoping no one steals it. Sure, it might be safe most of the time, but you're always at risk of someone or something eating away at it. Inflation, bank fees, or even worse, a financial crisis. Enter government bonds, the financial equivalent of locking that lunch in a vault guarded by an army of security personnel. Take US Treasury bonds, for example. They're backed by the full faith and credit of the US government, which, let's be honest, isn't going anywhere anytime soon. Even during the Great Depression of the 1930s, while banks were collapsing left and right, government bonds remained rock solid. Even in recent times, when banks in Greece faced a crisis in 2015, people couldn't withdraw their own cash from ATMs. But guess what still paid out? Government bonds. They offer steady returns, usually higher than a regular savings account, and they won't vanish overnight like some cryptocurrency meme coin. So if you want a safer place for your money than a bank that's one bad recession away from a technical glitch, government bonds might just be your best bet. Asset 2. Real estate, a tangible asset that grows. They say money doesn't grow on trees, but real estate might be the closest thing to it. For centuries, real estate has been one of the most reliable wealth-building strategies. Unlike cash, which shrinks in value thanks to inflation, real estate tends to appreciate over time, like fine wine or that one lucky sneaker collector who bought Jordans before they became a global obsession. In the 1950s, a Manhattan brownstone could be bought for around $25,000. Today, that same property could be worth over $5 million. Imagine your grandfather rolling his eyes when his friend bought property instead of leaving cash in the bank. Who's laughing now? Now let's compare that to cash. Let's say your grandpa left $10,000 in a bank account in 1950. Today, adjusted for inflation, that money would barely buy a used car. But if he had bought real estate instead, you'd probably be sending this video from the balcony of your penthouse. Yes, real estate has its risks: market fluctuations, property taxes, maintenance. But historically, it's one of the few assets that not only beats inflation but also builds generational wealth. So, next time you're debating between hoarding cash or investing in property, ask yourself, would you rather have a pile of paper that loses value or a piece of land that could make you rich? Asset 3. Gold and precious metals, inflation-proof wealth. For thousands of years, gold has been the ultimate store of value. Kings, emperors, and even pirates knew that when everything else failed, gold was still gold. Unlike fiat currency, which governments can magically print whenever they want, gold is finite, durable, and always in demand. Think about it. If you'd buried a gold coin 100 years ago, today it would still buy you a nice suit, a fancy dinner, and probably a weekend getaway. If you'd buried the same amount of cash, well, let's just say it wouldn't even buy you a cup of coffee today. During financial crashes, people panic buy gold, not cash. Why? Because while banks collapse, currencies devalue, and inflation soars, gold just sits there, looking pretty and holding its worth. Even central banks hoard gold, not stacks of printed paper. They know the deal. Gold is real money, while cash is just a government IOU. The real question is, if kings, banks, and even doomsday preppers trust gold, why aren't you? Asset 4. Luxury assets. Collectibles that appreciate. Did you know that some luxury items can beat the stock market? While your savings sit in the bank earning peanuts, rare collectibles are making millionaires out of smart investors. A Paul Newman Rolex Daytona, bought for $200 in the 1970s, sold for $17.8 million in 2017. Talk about timing your investment right. A Banksy painting shredded itself after being auctioned for $1.4 million, only to double in value because of the stunt. Turns out destruction can be profitable. A Ferrari 250 GTO that cost $18,000 in the 1960s was auctioned for $70 million in 2018. That's more than some lottery jackpots. The lesson? That old painting in your attic might be worth more than your retirement account. Instead of keeping cash in the bank, why not invest in something that appreciates in value and makes you look cool while doing it? Asset 5. Keeping some physical cash. But smartly. Yes, keeping some cash is necessary, but where you keep it matters. Storing it in a safe deposit box or a home safe gives you instant access and control over your money, unlike banks, which can freeze accounts, limit withdrawals, or even collapse overnight. Think it won't happen? Remember what happened during bank runs in Greece, 2015, Lebanon, 2019, and even Silicon Valley Bank, 2023. People rushed to withdraw money, only to find ATMs empty and bank doors locked. Even on a smaller scale, ever had a card decline at the worst moment? Maybe at a gas station in the middle of nowhere, or during a dinner date where suddenly you conveniently have to visit the bathroom when the bill arrives. Having some emergency cash stashed safely means you won't be left begging ATMs to work. But remember, only a small percentage, not your entire savings, because while cash is king, too much of it just sits there like a lazy royal losing value to inflation. Asset 6. Owning a business, your own money machine. Instead of letting cash sit in the bank, collecting dust and barely earning interest, why not put it to work like a loyal employee? Starting a small business or investing in a side hustle can generate passive income and help you build financial independence. Just think about it. Jeff Bezos started Amazon from his garage. Now he could buy a small country if he wanted to. Elon Musk took his PayPal payout and invested it all in Tesla and SpaceX. Now he's literally shooting cars into space, while some of us are still deciding if we should upgrade to premium Netflix. That coffee shop owner down the street. He started with one cafe and now owns a whole chain, all because he chose to invest in himself, not just let money sit in a savings account. The point is simple. You control the profits. No bank manager decides your interest rate. You control the growth. Want to double your income? Scale up. You create new income streams. Unlike cash, businesses don't just sit there. They work for you. So do you really want your money to nap in a bank account, earning less than inflation? Or would you rather make it hustle like a startup founder running on espresso and ambition? Asset 7. Cryptocurrency. The digital gold rush. Crypto isn't just hype. It's a financial revolution. If you had bought $100 of Bitcoin in 2010, you'd be sitting on over $50 million today. Meanwhile, if you had kept that $100 in the bank, you'd be lucky if the interest covered your coffee bill. Bitcoin has outperformed every traditional asset over the last decade. And here's why. It's decentralized. No government can freeze it, inflate it, or accidentally lose it, like some banks mysteriously do. It's scarce. Only 21 million Bitcoins will ever exist. Compare that to dollars, which seem to be printed faster than excuses at tax season. It's liquid. You can buy, sell, or trade Bitcoin 24/7, unlike banks that take the weekend off when you need them most. Sure, crypto is volatile, but so is life. The stock market crashes, real estate bubbles burst, and even banks fail. Yet, crypto is still standing. If you're still keeping all your money in the bank, you might be missing out on one of the biggest financial shifts in history. Kind of like refusing to use the internet in 1995 because fax machines work just fine. So here's the big question. Is your money really safe in the bank? With inflation rising, banks limiting withdrawals, and the global economy facing instability, sticking to cash alone might not be your best move. If you want to protect your wealth, it's time to diversify. Tell us in the comments, which of these assets do you think is the best alternative to cash? And which one are you planning to invest in next?